Quick note, this is an AI-assisted recap made for learning, not the original video, and not an official translation. This is Bloomberg's Balance of Power from Washington, hosted by Joe Matthew and Kaylee Lanes, during a shortened trading week just before the July 4th holiday. The headline that framed the whole broadcast was simple and unsettling: U.S. hiring had slowed sharply, and everyone was trying to read what it really meant for the economy and for the Federal Reserve's next move. Here's the number that set the tone. June payrolls rose just 57,000 jobs, roughly half of the 200,000 economists had expected. Only one economist in Bloomberg's entire survey had guessed anything that low, and on top of that miss, the numbers for the previous 2 months were both revised downward, making the recent trend look even softer. The unemployment rate actually fell, but mostly because people left the labor force. Leisure and hospitality shed jobs, its biggest drop since 2020. After the report, markets quickly pulled back their bets on the Federal Reserve moving rates this year. But Bloomberg's McKee urged some caution before reading too much into a single month. He noted pieces of the data look statistically fluky: the labor force down 720,000, the household survey down 500,000, plus seasonal quirks. Because those pieces will likely be discounted, and with services inflation still sticky, McKee argued the Fed is most likely to stay on hold. For everyday people, McKee said weak hiring like this really sticks in the mind, and average hourly earnings are still trailing behind inflation. So even when the top-line economic numbers look calm and steady, many households simply don't feel like they're actually getting ahead. That gap quietly shapes how confident people feel. But there was a brighter note. With oil around $68 and gas near $3.83, cheaper energy could eventually lift consumer sentiment and ease a little pressure on stretched household budgets. Ways and Means Chairman Jason Smith came on to mark 1 year of the tax law he calls the One Big Beautiful Bill, sharing stories from constituents. He highlighted no tax on tips, no tax on overtime, and a permanent, expanded child tax credit worth $2,200 per child. Smith also raised concern about data quality and the repeated revisions, touched on reconciliation, and warned Social Security could face insolvency around 2032. On trade, the message was that the United States will not simply renew the USMCA agreement with Canada and Mexico in its current form. Smith pointed to unresolved disputes, Canadian dairy and Mexican corn among them, as reasons the deal needs a serious renegotiation. But he was careful to frame it constructively. The goal, he said, is a better deal for American workers, not tearing up trade altogether. One striking item: OpenAI has reportedly discussed giving the U.S. government a 5% stake, an idea that could extend to firms like Anthropic or Alphabet. Smith stressed that America absolutely must lead the world in artificial intelligence, and especially that it needs to stay ahead of China in this high-stakes technological race. Yet in concept, he said, he actually favors less government involvement in these companies, noting that some critics call taking such stakes a form of socialism. Markets told a split story. The Dow Jones hit a record high, while the S&P 500 and the Nasdaq actually fell on the day. Chip stocks were the big losers. The Philadelphia Semiconductor Index sank about 6.5%, as money rotated out of the crowded AI trade. Palantir rose on an upgrade while Meta fell. Gold and Bitcoin each gained about 2%, as one editor questioned how AI spending is really funded, and whether the returns will ever justify it. On politics, there was a fundraising dispute between the congressionally mandated America 250 and a Trump-aligned Freedom 250, ahead of the nation's big anniversary. Panelists Rick Davis and Matt Robinson then discussed the rising numbers of independent voters and the deepening polarization spreading across the whole American electorate heading into the midterms, where control of the House is genuinely up for grabs. DCCC Chair Susan DelBene weighed in on a campaign finance ruling and a Democratic fundraising surge, saying the majority runs through purple districts, not deep blue primaries. So here's the big picture from a busy, shortened week. Hiring slowed sharply, yet several experts warned that one noisy report shouldn't be overread. A cautious Fed, wages trailing inflation, a debate over AI and government, and a split market all point to one word: uncertainty. The honest move is to watch the trend across many reports, not just one. The original broadcast is linked in the description, so go watch it. See you next time.